Saving versus investment. Okay. So when you earn money, either you are doing business or either you are working somewhere, you will get money in your bank account. Or you can take cash and you can give in the bank account. Ultimately, I'm just considering it's a bank account. So in bank account, what happens if you don't do anything? It will be in your saving account, and what will happen? You will get some 2 to 4% of return per annum. I'm saying per annum. This is 2 to 4% per annum. You will get if you will just keep money in your saving account. That is point one. Second, if you do recurring deposit, if you do a recurring deposit, so here you can get 6 to 8% based on your age, based on number of years you want to save. Second one is a FD. This is also 6 to 8% of return you will get per annum. The difference here is that recurring deposit you will choose monthly, quarterly, yearly based on that. Fixed deposit you will give your lump sum amount of money. Here I can consider here it's a per month investment, and this is one time. One time you will give 2 lakh, 3 lakh, and you will give in your FD, and that you return you will get. So this is a range, this will vary bank to bank. So this is very traditional thing of saving money. This is very traditional where you will give your money, you will give your money to the bank, and bank will do their investment and they will give you the fixed amount of return. So this is all about your saving. Second point is about investment. Nowadays it is very popular about mutual fund. Mutual fund. So what happens here? People will say, boss, return of saving account, RD, FD, everything is very less. I'm looking for some more return. So I will go to the market in the hope that I can get on an average of 12 to 15% of return. But I don't have much knowledge. So I am giving my fund, my amount to somebody, and that person will monitor it. That person will invest and that person will do everything. And I am hoping return 12% to 15% here. And I am giving my amount. There will be some kind of locking, non-locking. There will be so many things. But I don't have the knowledge of bond and equity market. That's why I'm giving my amount to somebody. But definitely that person will charge fee. If I will call this fee 1% to 2% I can consider in between, or it is less based on the amount and all based on the company. So this fee is the one component. And what they will do, if there is a fixed kind of return, so they will go and invest in the bond. And if there is a market linked, so they will go in the equity market and they will invest there. So if you have some more knowledge about the market, so you will say that why I will pay fee to somebody, why I can't buy this directly by myself and invest it. So for this you will open your demat account and you can buy yourself equity. If you want to do in the fixed income bond, that you can also do, but bond return is less. Equity return is on an average historically it's 12 to 15%. So here if you want to do the index ETF, you can do. If you want to buy stocks, you can do, and you can expect 12 to 15% of return, net return I'm talking here, and here is all about fee. So that will eat your 1 to 2%. So you don't want to give, so you can do by yourself. Only thing is that you will have to study and you should have some knowledge about the stocks. Third point, here is derivatives. Why derivatives is important? First thing is all about managing your risk management. If you are suppose that holding in equity 1 CR or portfolio, you are holding. And if you are seeing some downtrend in the market and you don't want to sell your 1 CR or portfolio, then you can protect yourself by buying put or selling future. So what will happen by doing this too is that your 1 crore will be protected. If you will buy put or if you will sell future, you can able to hedge yourself. But nowadays people don't look derivatives for risk management. They are looking for speculation. What happens if you invest 5 lakh in equity and suppose that you are getting 10%? Same 1 lakh you can invest in future, and if you will get 10% of return, this return I'm talking, this return, whatever this person is getting by investing 5 lakh, and you can just invest 1 lakh and can get same amount of return. So definitely it will be lucrative for you. In option, suppose that you will just keep 10k and you will get 10% of this return. Definitely you will be happy. Opposite will be also possible, but since I am talking about speculations, people will think that there will be a profit. Their way of thinking is correct, so they will jump to future and options. So I will just revise from the beginning that where we can invest, what we are doing, saving versus investment, is that we are earning money. We are earning money. Money is coming in the bank. If we will not do anything, it will be saving account. Our return will be 2 to 4%. And if we will do RD and FT, then our return will be 6 to 8%. Here per month we are investing, here one time we are investing, kind of saving. And then the point here is investment. Nowadays everybody is interested to earn more amount of money. So mutual fund is the first options because they don't have the knowledge of bond or options. So what they will do, they will give their amount to somebody, mutual fund house, and they will hope that they can get 12 to 15% of return. Only thing is that charges they will have to pay 1 to 2%. So definitely your overall return will be less than by 1 and 2%. But if you have little bit knowledge of the index or equity stocks, then you can have your own demat account. You can invest by yourself and you can get this kind of return. Then there is the derivatives point of view. Derivatives was made for risk management, but nowadays people is looking more towards the speculations. Why? Because if you will invest 5 lakh in equity, you can get 10%. Suppose that, and same 10% of return, the value here by investment of 1 lakh future persons can get, and same options persons can get by investing just 10,000. Opposite is also true. That's why it's very risky kind of thing. It was made only for the risk management. So in this way, you can save your money or you can do the investment.